Hello, everyone, and welcome to the NinjaTrader ecosystem event Tradesight Pressure Threshold Tool for NinjaTrader. My name is Juanita, and I am the NinjaTrader ecosystem support lead here in the NinjaTrader Denver office. Before we do start today's webinar, I do have a few housekeeping items. This webinar is presented by NinjaTrader LLC, which is the technology company responsible for developing and supporting the NinjaTrader trading software. Any brokerage-related questions should be sent directly to our brokerage team using the following phone number and email address. Lastly, if you are new to NinjaTrader, make sure you sign up for a free NinjaTrader account, which includes access to 14 days of complimentary real-time market data. Our platform is always free for advanced trading, strategy backtesting, and trade simulation. You can create your free account by using the following link on the screen and clicking Get Started under the Welcome section. Before I do turn the mic over to Chris, it's important to understand that futures, foreign currency, and options trading contain substantial risk and is not suitable for every investor. It is possible to lose all or more than your initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. For more information or for a full copy of the CFTC risk disclosure, please use the following link. Also, please remember that these training sessions are not a solicitation nor recommendation, but simply educational in nature. Thank you again for joining us, and without further ado, it's my pleasure to welcome to the NinjaTrader webinar room, Chris of Tradesight. Go ahead and take it away, Chris.
Thank you, Juanita. So thanks for having me. I do want to do a quick shout out. I assume you guys can see my screen as well. I'm going to do a quick shout out to NinjaTrader for the new web and mobile stuff. It's exciting to see it, and hoping it goes well, but it should be, we're very excited for that product. So it's been really awesome to work with Ninja, and we built all of our tools to Ninja, and it's been working out really well. So guys, my name is Chris Mercer. I'm the president of Tradesight, Tradesight.com. We've been around for a while. Today we're here to talk about what we call our Tradesight Pressure Threshold tool. But a little bit about us first. We were launched in 2002. We have been providing online trading world with trade calls, education, and market analysis for over 2 decades now, since we're now in 2023, right? We offer a complete monthly subscription service that provides tools, calls, and analysis in stocks, futures, options, and Forex. Our educational services have taught over 1,000 people how to trade the markets, and today we're going to discuss the math, the theory, and the use of a tool called the pressure thresholds. And I'm going to tell you, I know a lot of people build tools, they don't want to give away the math. We're going to give away the math on this one. So you're going to get to see exactly where this comes from and how it works. We're not just going to hide it behind a curtain for you. I'm the president and founder. My email is chris@tradesight.com. You can feel free to email me after the event at any time. My head equity analyst I've been working with for since 2004 is Rich at Tradesight.com, Rich Derrick. And he's got a deep history in the markets. We both go back to 1992-ish or even before a little bit. So that is a little bit about the company. Now let's start talking about what we're actually here to talk about today. So the way we look at the markets is that the most potent indicators and tools will work equally well across multiple asset classes, right? So if it works in futures, it should work in Forex, it should work in stocks, it should work like that, right? Otherwise, it's just, I mean, how can you have a tool that only works in one asset class if it's a technical tool? And the approach for us is that it should even maybe work, depending on the tool, in multiple time frames. Now, the tool I'm going to show you today, and we have a limited amount of time, so I had to pick one, is just a tool that we use on an intraday basis, but we do use it for stocks, futures, and Forex. And I think you can see some examples, especially for stocks and futures. I didn't stack up a bunch of Forex examples here because I know not as many people trade the Forex stuff as much anymore, but we will show you how it works in all those. And having indicators or tools that work across multiple asset classes and multiple timeframes simplifies one's trading approach. So in other words, if you know what your tool is doing, you know what it's looking for, and it works the same way on whichever asset class you're trading, that makes it easy to go, I'm going to trade some stocks today, I'm going to trade some futures, I'm going to find a path to success without just focusing on one thing. I know some people go, oh, I'm only going to trade, I've heard crazy things. I'm only going to trade Apple, or I'm only going to trade the ES futures, or I'm only going to trade, whatever. And that's just not the way we approach the markets. We look at it as tools that give us good ideas, work across everything, and I'm really looking for the good ideas, not trying to stay too focused just on one thing. So it also increases your competency and level of confidence once you see these tools that work across whichever asset class you're interested in. If it only works on one asset class, does it really work? And that's just our view, is that's not really how it works. We prefer the keep it simple approach to the markets, generally speaking. The purpose of a pressure threshold, this is what we're here to discuss today, is to have an objective expectation of the range that the day's prices should trade within. Now, if you've ever played with a pivot series, and I know most people have, a pivot series, is a very specific calculation based on only the prior day's action, right? I mean, if you know how the calculations work for a pivot, and you get the R1, the R2, and the S1 and the S2, you can go further out. That tool is only based on what happened yesterday, no matter whether the day was an up or down day, right? That's it. It's just high plus low plus close divided by 3 is the pivot, right? That's the example. And there's nothing else to it. And our pressure thresholds and the pressure threshold tool works a little bit more based on what was happening in the prior day, not just based on exactly what it was, right? If we have an up day, it's different than a down day. There are multiple uses of the pressure thresholds, and we're going to walk through. I have 3 that I focus on in particular. They're calculated from very near-term price action, but we get them before the market. Okay, so just like a pivot series, if Apple closes today, I can go calculate the pivot series for Apple tomorrow, right? That's how a pivot series works. It's the same thing with the pressure thresholds. I get the numbers. I already have them for tomorrow if I want them, right? So think of the pressure thresholds, we call them PTs, like a 2-day pivot series that is more directionally influenced than the standard pivot series. And I'm just going to first show you some charts, and then we're going to dig into the math. We're going to dig into the uses of them. But I want to show you how they get displayed on the charts in the NinjaTrader platform. So there are 2 levels every day, what we call the upper pressure threshold and the lower pressure threshold. Okay. The upper one, you can color coordinate it however you want in our tool, but I've got it as the red line, and the lower one is the green line. So this is just a sample day with Tesla. These are 5-minute candles. And you can see the back end of the prior day. And what you'll notice is that the prior day's action, it was just the last 2 hours that you can kind of see on this chart, right? The last 2 hours, we were stuck right under the green line. See how it used, that's the lower pressure threshold. And see how it used that as resistance. It couldn't get back through it. And then the new day comes in the next day, and we have new pressure thresholds. And we gap down just a little bit, and we head lower. And then you see how you hit that pressure threshold, so specifically that green line, and then bounced, and then the rest of the day was just nothing. It was stuck in the middle of that range. So that's kind of the goal with the pressure thresholds. You'll see it in a couple different ways, and sometimes the market ignores them. But when we see it get set like that, it means a lot of things. And what I mean by set is if the trading for the day touches those levels and stops, that's where we start to get interested in what happens from there, right? And so this is how we kind of use the pressure thresholds. But that's a good example right there, is that you had a little gap down in Tesla, you moved lower, and you hit the pressure threshold for the day, and we stayed in the range. Okay, and we'll get into all that now. This is another example of Robinhood, right? This is a $10 stock, but look at how the day played out, right? A little gap down, right? And then basically the low of the morning there, that first 5-minute candle was the green line, and that's the lower pressure threshold for the day. And then we held that level, and then we run back up, and where do we stall out? Basically right at the red line, which is the upper pressure threshold. So the goal again being, it's kind of like the expected high low of the day, unless something bigger happens. And obviously when something bigger happens, that's when you want to pay attention, and you can obviously gap past these levels, and then there's a certain consequence to them. There's also just trading within them, all those types of things. But these are what the pressure thresholds are about. And we feel like they're much more important than a pivot series, where I know some people focus on like R2 and S2 in the pivot series because they want to suggest that that's going to be sort of the range for the day. And I just think these are a little more effective. Here's another one more before we dig into some of the deeper details here. This is the NVIDIA chart on the day at 5 minute. And you can see again, a small gap down, started to break lower, didn't break the green line. You know, we kind of swept what we call swept it, but couldn't close below it. And that establishes the range of the day. So again, a lot of times you're going to find that these kind of that's kind of the expectation of where the range of the day would be. And that's sort of the goal. Now, there's going to be important meanings as we get further into this about what happens if you break them or you get past them. There's different ways to use the tool, but at the end of the day, that is the kind of common goal. The pressure threshold levels, like I said, work across all asset classes. We use them in the futures market for equity futures, commodity futures. Crude oil today, for example, had great use of it. Stocks, individual stocks have them. ETFs, you can use them in that, and Forex as well. The one thing about Forex is because it's a 24-hour market, we calculate the pressure thresholds based on where the amount of the day, not 24 hours of data, but the amount of the day where the general activity, the bigger activity for each pair occurs, right? So if you're doing like the pound dollar, that's a certain block of time per day, even though it trades 24 hours. There's just not enough activity to justify counting that. So we've done a lot of testing over time to make sure that we've got the hours of activity in the market, just like the futures trade overnight. But really, it's the action from the 9:30 open until the 4:15 settlement that matters, where the data and the volume is in futures. So we kind of calculate based on that. So, but we use these on all of those tools. All right, I'm going to jump right into the math, and then we'll get to the uses of it, because again, I want to, I'm giving you guys, this is how we do it. So we're going to talk about every day at the end of the day. So today we just closed, 30 minutes ago on Thursday. We can calculate the pressure thresholds for tomorrow. So there's going to be different calculations based on whether or not today's close was above, equal to, or below today's open. And so think about that for 1 second, right? I mean, you don't really get that in the pivot series. It's the same calculation no matter which of those three things happen. But here we're doing the math a little different based on whether or not it was an up day from the open to the close or a down day from the open to the close. Obviously, equals would be a different thing. Not too many days, do you open and get a close exactly at the price where you opened, but the math is still different if that happens. And that's how we are going to calculate these things. So, for example, the first example is if the current day's close is above the open of the day, right? So today's Thursday. If we opened and then we went higher and closed there for any given stock, futures contract, whatever it is, then the math is this. We take the current high times 2, we add the current low and the current close, right? Just like in a pivot series, you just do high, low plus close equals whatever and divide by 3. So that gets you X. But now the math we're going to use is we're going to take the X, right? That math that I already showed you, we're going to divide it by 2, and we're going to subtract the current high of the day, whatever the high was. And that gets us what we call the lower pressure threshold for the next day. Okay. If on the other hand, and then the UPT, the upper pressure threshold for the next day, which was the red line on those charts I was showing you, we're going to take that X again, we're going to divide by 2, and we're going to just subtract the low of the day. Okay, so it's a little bit different math. If on the other hand, if the current day's price close is under the open of the day, right, then the math is going to change a little bit because we're going to take the current high just once. We're going to add the current low times 2, and we're going to add the current close. That's our new X, right? And then we're going to take that X divided by 2 minus the current high of the day, and that gets us the lower pressure threshold. And the X divided by 2 minus the current low of the day gets us the upper pressure threshold. Okay. And then again, if it's an equals day, and again, like I said, those are rare. It doesn't happen often. Probably more likely to happen in futures than stocks, right? What's the odds that Apple's going to open and close at the exact same price every day? Then we're going to take just the current high plus the current low, and then plus the 2 times the current close. And that's our X for the day. And then we're still going to take the X divided by 2 minus the high of the day is your lower pressure threshold, so further down. And X divided by 2 minus the low of the day is your upper pressure threshold. So I hope that makes sense. That's our math. I'm sure this will be recorded, so you can come back or you can screenshot this or refresh it, or take a look at it later. But this is how the pressure thresholds are calculated. Now, I've already shown you a few examples of how they contain the market, sort of, but now let's talk about some of the different uses of the pressure threshold. So there's 3 uses in my mind. One is that the upper and lower are resistance levels for the day. We kind of saw that in the examples that I already showed, right? We kind of ran into those lines, couldn't get through them, started the day in between them, right? And then kind of ran into them. And so they're very useful. They're very important numbers to know. Whatever you're trading, it's important to know them because you want to see what the market does when it gets to them, because they do have a chance of being support or resistance for the market, right? We also call them breakout and breakdown levels, and we'll talk about that in a minute. And again, that's going to come down to how we address those levels, and then if we break them later in the day. And then there's also gap fill thresholds. So what happens when you gap past the UPT or gap below the LPT, right? And what could they mean in those scenarios? And there's 3 different uses. Obviously, that's those 3 that I just described are all things that we kind of keep an eye on. And we're flipping through stocks and futures all day long, and trying to monitor what's getting close. I mean, some stocks never touch these levels all day long, and that's fine. Some stocks drift through them in a way that looks so disconnected you wouldn't actually do anything based on it. But when the market addresses these levels, and I call that setting the level, that's when we have to pay attention, because they're calculations, they're key calculations, and then the market says, yep, here it is, I got here, and I see it. I see this level, and it means something to me, and now what do we do? And that's how we're going to use this information. On a typical trading day, the PT's pressure thresholds represent the band, like I said, that we will trade within. The upper pressure threshold and the lower pressure threshold are important support and resistance levels for the session. They're measured from the prior settlement, like I said. The UPT and LPT are almost never an equal distance from settlement. They are directionally biased from the prior near-term price action, and this is why it's so different from the pivot series. I know a lot of people love to trade off the pivot series, but I can tell you I prefer this over that. That's just my personal preference, having seen it so many times. And that's the key distinction between a standard pivot series, where the levels are equally spaced and not directionally biased, right? We're giving a calculation where, depending on if yesterday was up or down from the open to the close, not having anything to do with the day before that, right? In other words, you can be down one day and then gap up and head lower. And so now we're going to do a calculation based on the fact that was actually a negative day of trading, right? Or you can gap up and you can head higher. That's a positive day of trading. It doesn't have anything to do with whether the day was up or down. It has to do with whether the day was up or down from the open. And so they're not, the calculations change, and they're not biased to just anything, or it's more biased to the directional, not just whatever, not just here's what yesterday was and we don't care either way. Okay, that's sort of the difference. So I'll give you an example here. Here's one where this is snow. And these screenshots, just so you know, we got to get this type of presentation approved through NinjaTrader in advance. So most of the screenshots you're going to see were taken back in the middle of February. I just used 1 week, and I took what I found for that week. I didn't have to, I have to reach around to find examples. I just had to take them from that week and then set them up. But what you're going to see here is we gapped under, in this case, the green line, which is the lower pressure threshold, right? So you see the back end of the prior day, which was nothing exciting, stuck between the 2 levels, doesn't matter. So we come into the new day here, which is most of the chart, the whole right side of the chart, like 75% here, right? And we gap down, and as we head up, where did we stop, right? A lot of people go, oh, I'm going to play the gap fills. Yeah, that works a lot. We'll talk about that sometimes. But right here on the move back up, what was the gap fill? If the gap wasn't going to fill, where were we more likely to stop out? And you can see we hit that green line exactly twice, and we couldn't get through it. And that is the point of the lower pressure threshold. If you gap past it like that, you're going to find that, it's a little more work to get going. And I'll give you some better examples here in a minute. But you can see how we stopped at it exactly, right? I mean, that's just how it works. The Another example here, on the other hand, though, is that we gap down on Uber. Okay, and this is a different day that like a week or two later, we gap down on Uber, and you see how fast we broke through at point A on that chart. You see how fast we break through that pressure threshold line, right? It's like it's not even there. So now, okay, what does that mean? Well, now we've got some strength in the market to fill that gap, and we go back up, and we not only fill the gap and go back to yesterday's close, but we keep going, and then look at it. What happens after that? Then we hit point B on the chart, which is what? It's the upper pressure threshold. And here's where we stall out for an hour or two, right? Because that's going to be, here's maybe the expected range of the day, and that's going to be our kind of wall. And then what happens is a little bit later, we finally break through that, we get a close above that. And from that point, what do we do again? We run, that's point C on the chart, right? We run again, right? So this is one of those examples of gap past the pressure threshold, right? And then break right into that area, break past it really quickly, and then scramble basically to fill the gap, pretty quick move, and then we go all the way to the upper pressure threshold. We set or establish the level, and then eventually break that level and go higher. So there's a lot of opportunities in there, right? A lot of information from the market telling us why these things matter. So this is what I like to see on the pressure thresholds, right? It's an opportunity to do something because it actually addressed the levels in very specific ways. One more example of just kind of these gap fill plays. So you can see here, this is I don't know what this is. This is sorry, my bad. Oh, this is the future gap up, and then we head lower, and look at that big speed candle one more time at A, right? Where we break right through the upper pressure threshold, right? Doesn't even care. The big candles are usually, if you're going to use those levels, you're going to break right through them or not get through them at all. And in this case, we do, and that says to us, okay, now maybe we're going for the gap fill, and maybe even lower. And we got down kind of close to the lower pressure threshold for the day, but we couldn't really get to it. But still, that big candle, why do you think that big candle happens right? I mean, the biggest candle of the day is on the one where we broke through the level. So it's, again, a very useful tool when you gap past the levels, and you can monitor whether we get through that level or not. If we don't get through that level, then that's less interesting, obviously. So they're breakout and breakdown levels, right? All the time. When price crosses a pressure threshold level, it is a strong indication that one side, whether the bulls or the bears, depending on if you're moving up or down, has overwhelmed the other. This is atypical and also a trading opportunity, right? So if you use the level and then do something through the level, that's very useful. When it's set and then broken, we have a potential trading opportunity. So again, if we touch the level, I mean, I don't, if all we do is kind of drift through a level or whatever, it's not that interesting. It doesn't do anything for me. I'm not going to monitor that. But when we touch the level, or if we break through it really quickly in a big candle, those are the examples where it becomes very useful. Okay, and so when you look at something like this chart, this is Texas Instruments one day, and again, gap down a little, nothing major, but look at the low all morning long, right? All morning long, the low of the day is the green line. It's the green pressure threshold, and it bounces off of it 1, 2, almost 3 times, pretty close to it. So in my mind, we have set the lower pressure threshold for the day, right? And then look what happens in the afternoon. We finally break under it. And when we break under it, even though it's late in the day, not a lot of time in this particular example, you get a move, right? And so why did we stop exactly where we did for most of the day? That was the pressure threshold. And then what happens after that? We finally break that. And because I know that this level was established, set by the market, that makes it interesting to take a short under that level. 80% of price gaps fill the same day, right? This is factual, we know this. The larger the gap, the greater the chance of remaining open for the day. So if you have a small gap in the market, it's going to fill usually pretty quickly. It doesn't matter if it's stocks, futures, for whatever. There's no gaps in Forex except for over the weekend. But 80% of gaps fill the same day. The larger the gap, the greater the chance of remaining open for the day, right? But how would we measure that? How would we decide what's a big enough gap? The pressure thresholds are also what we call gap fill thresholds. They will objectively quantify if a gap is large enough to remain open for the day. Okay. If a price gap exceeds the pressure threshold, either way, either a gap up and we're above the UPT, or a gap down and we're below the LPT, and remains outside of it for 5 minutes, it makes it more likely that the gap will not fill that day. And if a price gap exceeds the PT and remains outside for 15 minutes, that makes it even more likely that the gap will not fill that day. So the longer you spend time outside of the pressure thresholds after a gap, it changes the likelihood of whether you're in that 80% category where most things fill, or 20% category where they don't. This helps us quantify when to expect a gap and go session versus a gap fill session, right? Helps us decide what's probably going to happen here with this futures contract or this stock contract or the stock by itself. So like, for example, today, here's one on, here's an example of the futures, a little gap down, right? You look at the right side of the chart, a little gap down, but we opened between the PTs. We're between the green line and the red line. And so, we kind of made that way back up, and, we filled the gap. And did we set the top level? No, we didn't. We kind of just went through it. So that level doesn't get useful to me, but the fact that we opened between the levels sort of increases our chances of it filling the gap, which can be useful information however you're looking at the market. Even if you're not trading futures, right? You still need to know what's going on in the futures market to trade stocks, because market directionally, you want to know what's going on. But here's a different example where we gap down and we're well beyond the pressure threshold, the lower pressure threshold, right? We're in the green line, and 15 minutes into the market, we're definitely not even trying, and never get a chance to come back up and fill the gap. And it's not necessarily just because it's a bigger price jump. Keep in mind, look at where the LPT and the UPT are on that current day, that right side of the chart current day. Look back at the prior day. Because we gapped up and closed a little bit lower, we're using that math for the open and then close lower, which creates sort of a shift upwards in the pressure thresholds, right? So even though it's a fairly big gap a fairly big gap down that day, we don't get back to those levels, and we just don't even really, it doesn't seem like we really even tried, does it? I mean, it's pretty much a flat day in the markets. There's not a lot of excitement there. So again, these pressure thresholds can be, and this, by the way, you can look at this example, because if you go back to the day in between a little to the left, it's the same example that I showed you earlier. The first day was, and so we could broken through that pressure threshold coming back down, filled the gap. This time doesn't happen at all, obviously, right? Somebody's asking, does this apply to intraday futures? That's what this chart is. This is the ES. So this is intraday futures right here, right? So everything about stocks, futures, and Forex, this applies to. Options, obviously not the same thing. And we do teach people options, but the stocks, futures, and Forex it's all the same stuff. We use the same calculation to come up with the levels, and it works the same way. When PT's pressure thresholds line up with other indicators, they have more effectiveness, and we refer to this occurrence as a double level. Okay. The pivot series, value areas, and other indicators will be even stronger levels when they're in line with the PTs. In other words, if you've got a pressure threshold and something else, let's say the pivot is the upper pressure threshold, right? Now you've got where people use the pivot series, and you've got where people use the pressure thresholds, and they're both, let's say they were both the same number, right? That's going to make that even more important from an intraday perspective, right? And so when we, like, for example, when we trade futures, which we do all day long, here's a chart of the ES again. Look at, these are all the different levels that we use. And in this particular chart, the labels are on the left side because we do that on the futures. So you can see the UPT and the LPT. They're purple lines, okay? We also do the pivot series. We also do the value area high and low. We also do what we call break levels, which are GAN levels, also important. Something else we can come back and teach you guys at some point in time. Everything lines up together. You get these levels each day and you calculate them. And so if you have two levels that are basically the same number effectively, that really becomes a more important number, right? What if it's three levels? What if there are three things that we're monitoring that we all know are important, but they're all the same number for the day? Then that makes it a lot harder to break through those levels. And you'd like to see the market touch it, and then if it decides to, you can trade against that level, or you can try to break through it, which also that's usually where the trade is. So I know we're time limited on this thing, so I'm gonna kind of wind up. Let me see. There's a question here. Do you have a scanner for this? We don't. There's no scanner for this particular tool in the sense of, can you just say, show me every stock in the market that's what? You know what I mean? That's near the pressure threshold. I mean, that's a lot of data. Yeah, I mean, that's correct. You can. We are working on. We have it for some of our other tools, and we're going to work on it for this one too, where you can put it into the market analyzer and add it as a column, so you can see what the pressure threshold is, and then you got to match that up, and you'd have to be able to set like how close, and obviously how close depends on, I mean, if you're looking at a $400 stock, how close versus a $12 stock, right? You'd have to set that to get some kind of alert. So it's a little more complicated than it sounds, but we are sort of working on that. Whereas we have other tools that wouldn't be as dependent on the price level, that we do have in the market analyzer, that you can say, okay, like, how close is this signal about to hit? So, but what we do here at Tradesight is, we have a list of what we call generals. It's 50, 60 stocks that we monitor, the most active stocks in the market, plus the futures we monitor, and the top, I mean, ESNQ, Russell, Dow. We're getting ready to add the FTSE and the DAX. We've got crude oil, we've got gold, that type of stuff. So it's pretty easy to just kind of keep an eye on it from that perspective. And on the stock side, we just flip through the stocks on a regular basis and try to make sure that we're checking to see if one of them is getting close to setting the level. But yes, we are working on a scanner for this. It's complicated because you're leaving a lot of variables in terms of, like, when do you want to know if it's getting close, right? How close do you want to be? Do you have a YouTube? Sorry, somebody's asking a question. Do you have a YouTube with more up-to-date videos on your tools methodology? We haven't done as much because we recently, and I would say, let's call it 5 months, switched to NinjaTrader from a different platform. And so we've kind of been building out these tools. You're kind of the first ones to see them on Ninja. We've got about 10 tools total. And and like you said, is there a scanner? Once we get them all done, then we're going to start building out some of the YouTube stuff. We do have a 6-month training program that we do for all of our tools, that shows people how to trade. We teach people from start to finish how to trade stocks, futures, options, and Forex across the board. And we kind of build it up by teaching you each of the tools and then showing you how to apply it to each asset class, and then showing you how to intermingle the asset classes, right? Look, be honest, most people who trade stocks should be following and tracking what's going on the ES and the NQs. Otherwise, how do you know what's really about to happen? Like, how do you figure out what's going on with your stock, since so much of the stock is just moving based on the market, right? So most of the best traders we've ever taught trade all asset classes. I always discourage people from limiting themselves. But yes, once we get all these tools built for Ninja, they're built, but we want to add some extra features still, then we can start talking about, putting examples up and stuff like that on YouTube. And that's your question. I understand that question. So just to show you some of the other tools and stuff like this, this is the QQQs one day. You can see that we kind of gapped down. We didn't close below the green line, which is the lower pressure threshold. We then ran up and we hit the upper pressure threshold. So good example again of the range for the day that we always talk about, right? But then we also have what we call an exhaustion bar counting tool, which is the numbers that you see. And when you get to a 13, that is the exhaustion signal. And you can see that we got an exhaustion signal, again, too late in the day to really do much with it. But we got an exhaustion signal late right against the upper pressure threshold, which gives you, like, okay, yes, it's probably not going to be able to get through this level because it's an exhaustion signal. So again, combining some of our tools. This is another one I found during that week. I was putting this together for everybody for Ninja. I love this one. It's great. So again, the 13 is the exhaustion signal either direction. In this case, if you look at point A, this is Apple. And again, focus on the right, 60% of the chart, which is to the current day. We've got the pressure threshold up at the red line, which is 146.36. The lower line, the green line, is 143.96. Okay, and you can see that we came down for the day, gapped down a little bit, reached down one time right around where you see that 12 number, and tipped off of the lower pressure threshold, just literally bounced off of it. So that set the level. Then we got a 13 exhaustion signal, which is kind of meaning the move to the downside is too much. It's time to move back up. And we tipped off of the lower pressure threshold again. And then from there, what did the rest of the day do? We rallied back up, couldn't quite get through or back to the upper pressure threshold, but we made a good attempt. And it was still a decent move heading back up there. So I know we're cut for time the way that this goes. So that is pretty much it. You can find us at www.tradesight.com. Again, Chris@tradesight.com is my email. Feel free to email us, and we do have a 2-week free trial to our service that includes all the NinjaTrader tools, our trading lab where we talk all day long and talk about the markets, all of our trade calls that we make, and then we also have a 6-month training program that teaches you how to trade all 4 asset classes: stocks, futures, and Forex. If anybody has other questions, I think I got like 4 minutes left here. They said you can type them in the chat room here, and I will answer them real quick. But otherwise, be happy to hear from any of you in the future. And I'd like to thank Ninja and Juanita again for letting us show up for this, and we'll continue to work on improve a couple of the tools we have left. We have 2 more we're trying to add, and we're happy to have everything over here on Ninja now.
I'm just gonna leave the room kind of open for a minute or two in case any additional questions come in, Chris. But if I don't see anything in the next few minutes here, I'll go ahead and close it on out.
What is the PIFR?
I think she's meaning to say the offer.
Offer, right? Got it. Yeah. So, well, again, I mean, the easiest way to get started with us is to, take the free trial and come in and listen to what we're doing every day. And like I said, get the tools. We do offer a discount right now on our 6-month training program if you are using NinjaTrader. So you can come once we start talking to you, we can help you out more with that on the 6-month training program. But again, there's a 2-week free trial. There's no obligation. You can cancel at any time. It's that. So the best way to get in is to take that. We'll get you set up with our trading lab. We send all of our calls through the Twitter feed, a private Twitter feed. So you have to be invited once you join, and that's how you get the calls. But we also talk all day long in the lab. And then from that point we can talk about NinjaTrader offers. Sure. We do a lot of mentoring sessions. So what happens is with our 6-month training program, you get like 30 hours of online video, and we're redoing it for NinjaTrader versus where it was before. We're in that process. We're still getting all the tools, like I said, wrapped, but you'll see the blue 2 buttons right on the website. One says start free trial now, right here. And that'll get you rolling, except for now I just lost the chat. There we go. So yeah, so this is our website. So again, you can find out about the regular services, which is our subscription service monthly. Most people go through the mentorship program and learn all the tools and learn how we do everything before they continue with the subscription. But you can definitely take a free trial for 2 weeks, no obligation. Just cancel it whenever you want, and then and then you can email me, like I said, Chris, CHRIS @tradesight.com is the email.
We just want to thank Chris so much and his team for being in the room today and for taking time to share with us. If you enjoyed today's session, we hope we'll see you in future events. For all social media alerts, please follow us on the NinjaTrader ecosystem websites. We'd like to remind you the information provided in this was that of Tradesight and not of NinjaTrader. All information was for educational purposes and should not be construed as trading advice. Enjoy the rest of your day, and we hope to see you in future webinars. Happy trading from all of us here in the NinjaTrader ecosystem office.